Welcome back. Today, we're not going to waste too much time. We're going to get straight into the price action and talk about what Bitcoin wants us to do next. But before we do any of that, big shout out to the guys who followed over the weekend. Shout out to Stephen Carmen. Shout out to Silver Cars. Shout out to MC Shakroon. Sorry if I've butchered your name, he or she. Shout out to Chris Kula. Shout out to Vanille Jane. Shout out to Balin A. Darwish. Shout out to Yanga Jubase 2. Shout out to Incept Invest. I like that name. That's a beautiful name. Incept Invest. And I think he actually or she actually left me a message on YouTube. So thanks for the comments, guys. Feel free to obviously like these posts, share these posts, comment on these posts, because it just makes me realize that, hey, listen, this is helping someone and this is actually beneficial to you guys. So feel free to obviously keep spreading the word as we grow. The channel at the moment, where are we at the moment? The channel at the moment, if we take a look, is I think we've got about 250 followers, all right, which is not a crazy amount. It's not a crazy amount, and the aim is to get to about 500 by 2025. So I'm pretty sure we can do that, but keep following, keep sharing, etc. And I'm sure we'll get there. All right. I'm not going to bore you with any of that, but in case you're wondering where to find me, I think the best place to find me is to go on the website, tradejournal.co.uk. If you want to have a chat, drop me a message here, fill in a form, and I will most likely get back to you within 24 hours, probably on the same day. But yeah, let's get into the trading action and let's talk Bitcoin. So if you've been following this channel for some time, if you've been looking at these videos religiously, you probably know that, hey, we are in this massive range, okay, that's been going on for ages. You also know that, yes, we do have this bear trend line that we're looking at and we're watching to see what happens at the trend line. And yes, Bitcoin has been boring for quite some time. In my opinion, it's been a bit dry. I think the last month or the last 2 months, or even maybe it's just been a bit dry. It's been a bit dry. We had this massive move up. We've had this consolidation / range phase. All right. Now, this trend line is a very pivotal trend line, as we talked about last time. And the history of trend line goes hundreds and hundreds of years, almost spans about 400 years, when you had the rice tradesmen, trying to predict what the future prices of of rice would be based on Japanese candlesticks. All right. So it goes on for quite some time. And then you've got the Dow Jones, did a lot of work with trend lines. But basically, all you really need to know is how they work. You need to know what a bull trend line is. You need to know what a bear trend line is. You need to know what a major trend line is. You need to know what a minor trend line is. You need to know how they work. All right. So as we go through today's video, we're going to be talking about that. And I'm going to try to give you some nuggets, some juicy nuggets about trend lines, but I won't give you everything because that's unfair to the guys who I teach one-to-one. All right. So anyways, I'm going to get rid of Market Cipher Oscillator. And by the way, if you don't already have Market Cipher, I suggest you get Market Cipher. Market Cipher is a great, great, great tool. It helps you predict turning points in the market. And I use Market Cipher religiously. I use it to confirm my entry. It's not my main trading strategy, but I kind of use it to confirm my entry. Now, Market Cipher, you can probably find it on their website. I think they got marketcipher.com or something like that. But definitely get hold of that. I think it's a very useful tool. All right, so let's get into it. As of last stream, I believe, what day is it today? My head is all over the place today, honestly. Today's the 22nd. I think it's a Tuesday today. Today's a Tuesday. All right. But as of our last post, we said we're looking for a few things. We said, congratulations if you had that short play from the trend line. Very easy short from the top of the trend line. We talked about that. We're not going to talk about that again today. But we also said, hey, listen, we're waiting to see where that retracement is going to take place. All right. And if you look at the last video, I said that retracement could take place in many, 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 many places. It does not necessarily have to come up all the way back to this pink box. If it did, it would be nice. Why? Because the higher and higher the retracement goes, the deeper and deeper the retracement goes, the better your risk to reward, right? If you're doing your risk to reward properly. If you're doing it properly. Well, remember, I also did say that there are other areas we could be looking at for this retracement. And one of those areas were the fact that we had a 24-minute zone in there. We had this zone in there. We had this zone in there. And I said, hey, listen, this could tap any one of these zones before it carries on down. So it doesn't necessarily have to go up to up to the pink box. All right. And then we said, cool, that's the retracement play. That would be a nice play. We also said, watch out for this 1 hour zone, this 1 hour demand zone. It most likely will act as some sort of, support for price. Why not? Why won't price, get some sort of resistance there? Actually, I'll use the same phrase, support, because I know some of you, especially the beginners, as soon as they hear resistance, will think, oh, resistance, price ceiling. Okay, this is weird. So we'll stick to the same terminology. But anyways, chances are we're going to get some support there. Also, the chances are we've got this green box that we're going to get some sort of, hesitation there, or a rebound in price, or at least just a slowing down of price. And that was due to Mr. Fibonacci. All right. I'm not sure if his name was actually Fibonacci. I don't think it was. Fibonacci. But anyways, the Fibonacci retracement says hi. If you look at this box, which is our golden box that we talk about, that's a key place to get a reaction from. And we took that fib from this low to this high, and I think that was about the 786 level. All right. But anyways, let's see what Bitcoin's been up to, and let's plan for the foreseeable. I'm not going to go on about, the macro stuff. We know how that works. We've talked about that time and time again. Feel free to back test it. You should always be back testing as a trader, getting your stats, refining your stats on a monthly basis, a weekly basis, etc. All right. So we're going to zoom in. Can we see anything on the 4 hour? So on the 4 hour, we've had high, low, high. We've had a retracement. Our 4 hour structure still looks similar to what it looks like a few days ago. Let's take a look at the 3 hour. Okay, in the 3 hour, we've kind of had more structure develop. Why? Because on the way down, if we're looking at from this high to this low, on a 3 hour, we've had a low, high, low. Okay, and this is what our 3 hour structure currently looks like. I'm going to change this to a thick line and maybe have it thickness of 2. Let's have that as a thickness of 2. I don't like that. That doesn't look good. It doesn't look good, does it? All right, we'll stick to it anyways. It doesn't matter. It's fine. It's fine. All right. Maybe gray. I think gray. I'm not really feeling that dark black. Yeah, that's more like it. Yeah, that's it. All right. So this is what we have on a 2 hour. Do we have this on a 3 hour? Do we have this on a 4 hour? No. On a 4 hour, we're just going to flush down. Bear bar, bear bar, bear bar, bear bar, bull bar, and another bear bar. But very, 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 very straight price action all the way down. All right. On a 3 hour, still a flush down, but we did get that retracement. We're going to talk about where that retracement came to in a second. And you can probably see it tagged that 5-minute zone, didn't it? But let's see. On a 2 hour, similar structure. Getting a call. Under 45 minutes, similar structure. All right. So what we're gonna do now is we're gonna go to about the 15-minute. Okay. No, let's start with the 1 hour. It looks all right in 1 hour. So we're going to go to about the 15-minute. We're going to ask ourselves, what the hell is going on? Why have we stopped here? And why have we gotten a retracement that came here? Well, the reason we have a retracement that came all the way up here, you can find that reason on the 5-minute. If you go onto the 5-minute, you can see that was our first position of resistance. That was our first supply zone in this last expansion leg. And that was the zone we were watching out for, right? Now, if you had the foresight to say, right, TJ talks about this zone, right, it's still a valid zone, right, on the 5-minute, we could have entered a trade there. I'm going to take it. I'm going to see if I get my market structure confirmation. If you did that, then great. Congratulations. You probably would have netted about 2 or 3x from that one. We can check that in a second. All right. But if you didn't, that's also fine. But what did price do? Price came up for this 5-minute zone, and that's exactly what it did. All right. And it reacted off of this 5-minute zone. So let's see. Could we have entered a trade? I'm going to drop to the 5-minute, and I'm going to follow the market structure on this expansion leg and see what happened. So we had higher high, higher low. We had okay. So on the 5-minute, we kind of had higher high, higher low, higher high. We had a break in the structure. And then we made this high here, okay? So you can't really, it doesn't really hold there. So I'm gonna at least go on to the 10-minute, because on the 10-minute, this On the 10-minute, what we have here is just one straight swoop up. Okay, so on the 10-minute, our market structure looks like this, where we have higher high, higher low, higher high, higher low, higher high. All right, brilliant. So based on the 10-minute, in order for us to justify entry into this trade, we need to at least reclaim this level here. We almost did it. Now, if we had gotten something like this, if we had had this high take out this prior high, then had a break in the structure, yes, I would justify that. So what I mean by that, I'm going to manipulate this example slightly. If we had this wick go slightly bit higher, say like that, okay, where this high swept that high, I would have then looked at that and said, hey, listen, this is the level to close below, this level right here. Yep, the moment we close below that level, I would have looked to enter that short. Simple, very easy. But we did not. Oh, so many calls today. But we didn't quite get that, did we? We did not quite get that. So we can't really justify that entry unless you want to say, okay, I want to drop down to the 3-minute. And if I drop down to the 3-minute, see on the 3-minute, even if you're looking at this expansion leg, this is the level that you have to lose. This is the level you have to lose here. Excuse me. So today's just a bit of a slow day for me, but we'll get this out anyways. This is the level we have to lose. This is the level why is this the level we have to lose? The reason it is the level we have to lose because at the moment on this expansion leg, the structure looks like this. Higher high, perhaps a higher low for a higher high. Okay. And then we get a potential break there. Not necessarily a break, but it kind of comes down. Okay, so that's kind of what you have. That's how you have to look at it. That's how I'm looking at it, at least on the smaller time frame. Okay, let's see on the 2-minute. Did we get anything on the two? No, don't. You don't. I mean, you don't have to force it. Yes, it did get a reaction off of supply, but was it a tradable reaction? Probably not. I won't be surprised if most people didn't enter that one. Okay, and even if you did, what's the point entering here just to come down here? I mean, there's no point. Risk to reward makes no sense. All right. But let's say you are, let's say you like to risk. Let's say you're a risky person, right? And you said, you know what? I've got a good feeling about this order block. I've got a good feeling about this demand zone. And you said to yourself, the reason I've got a good feeling about this demand zone is because, you know, this demand zone was a demand zone that gave us a very aggressive flush down. Okay. And not only that, this demand zone is the demand zone that is closest to our old supply range, this line over here. Now, if you said that and you said, you know what, I'm not even going to wait for market structure. I'm not even going to wait for that. I'm just going to place a short from that block or from that supply zone, and I'm going to hope for the best. I'm going to close my eyes. I'm going to, turn off my phone and just open it in about 20 minutes to see what happened. You might have netted at least an 8x with that. But would I recommend doing that? As a viable trading strategy? No, I will not. All right. So, in my opinion, I don't think that was a tradable play there. Okay. Now, if you did enter that trade and you got that one, well done. But yes, we got a reaction, but in my opinion, not a tradable play. Okay. So then what has happened then? In that case, what has happened in the last 24 hours? Well, it's very simple. In the last 24 hours, we've had our flush down. Okay. We've retraced. Guess what? We've tried another attempt. All right, at this low. But guess what has stopped it? We've been stopped by this 1 hour block, this 1 hour zone that was from our old demand range. This being our old demand range. Okay. So we've had this block. It's basically been what has held price up. Not only has it held price up, it's held price up in a way that it's kind of ranging at the moment now, isn't it? Because if it was just a reaction from that zone, what we would expect to see would be down, up, down, perhaps an up, and then another flush down. But instead, we've ranged for a bit. We've kind of ranged for a bit. We've started to oscillate. Remember that sine curve we used to talk about? We say a range kind of looks like a sine curve, doesn't it? Throwback if you did, high school math or GCSE math or A-level math, your classic sine curve looks like this. It's got, what does it have? So it's got your angle theta, and then it's got your y-axis or whatever you want. And then it looks like this, doesn't it? Kind of looks like this. That's your classic sine curve. All right. And that shows us how something oscillates with time. All right. Kind of looks like this. And that's kind of how I see ranges. The moment I identify a range, I'm looking for it to oscillate, similar to a sine curve, all right, or cos curve. That will oscillate as well, doesn't it? All right. So here we are. We're treating this as a range. Okay. So if we're treating this as a range, what do I need to do? I need to identify where is my range low and where is my range high. So it's very straightforward. Look, this is my range low here at the moment, and this seems to be my range high. Okay. So based on that, what I'm going to do then is I'm going to draw out my range, and I'm going to say, hey, look, this is my range. 1 second. Let's get the proper format. No, not that one. I always get this wrong. I should just memorize it. I think it's range. I think it's range 1. All right, cool, brilliant. So we've got our range low, range high. All right. Now, what's price tried to do? Well, price has reacted from this low, is headed back to the high, has come back for the low, and is deviated that low, headed back towards the high. It's not been able to take the high there. Perhaps it reacted off a zone there, then it's come back down for the low. It's taken a zone another time. All right, and it looks to be oscillating towards the high again. All right. But regardless, we have our range low and range high. So where are we looking for our next trade is the question. Well, for my next trade, let's go on a 15-minute. I'm going to be looking to see, okay, do we have a potential Trinity model here? Do we have a potential Trinity model at play? Well, perhaps. Well, we've had tap number 1. We've had tap number 2. Okay. And we look to have tried to have a tap number 3. All right. But is this a viable model 1 or is this a viable model 2? Well, let's see. Now, if price had actually come up here, maybe broken structure here, and then we had a retracement here, I would definitely be in this trade for a long already. If that is what happened, if we had a break-in structure here, okay, and that retracement, I would definitely be in a trade already, which because that will tell me market structure has flipped. Okay. However, what we got is we got this low, we got this high, we got a break, not a break-in structure, SFP, okay, but we didn't quite rotate all the way to the top. Instead, we came back down, all right, and we haven't really done much. Now we're trying to rotate to the top again, all right. So that makes me slightly hesitant. Okay. Now, could this be a Trinity Model 1? Well, if it's Trinity Model 1, I need to see tap number 1, tap number 2 successively lower than tap number 1, and perhaps another tap number 3 that comes a bit lower down here. So something like this. All right. Oh my gosh, so many calls. Okay, so another tap down here. Now, if we got that accompanied with a nice break-in structure, then I'd be in for a long. Okay, so all right, what are we looking out for our next trade? Well, first things first, I know this is a range. Now, because this is a range, I'm going to be waiting for a deviation at the range low or a deviation at the range high. So that tells me there's still a chance I'm interested in a long here. Why? Because yes, this is a demand zone. This is a fib zone. So why not look for a long, especially when price is slowing down here and starting to accumulate? So what I'm going to do now is I'm going to say, right, I'm going to set a potential trade number 1 here, a potential long. Okay, in the case that we come down for a third tap, I'm going to take that just to the range high. Let's say the stop loss is probably around here, 11x. Right, so you might think that's a stupid, silly trade or that's not worth it. But hey, look, that's an 11x trade. You risk $1, you made $11. You risk $1,000, you've made $11,000 in the space of less than 4 hours. That will probably take. Okay, so not bad. Not bad, not bad. So that's what I'm waiting for, trade number 1. Trade number 2, I'm waiting for this. Well, in the case, price is looking to do this. So price is coming down, up, down, coming back up to maybe SFP this level. So SFP that level. Okay. I'm going to be looking to enter a short there because not only is that a lower high, okay, this being a lower high, so lower low, lower high for that continuation. Not only is that a lower high, that's also a nice range deviation play. So that is another place I'm looking for a trade. So I'm going to be placing a short there. Okay, whichever comes first, I don't really care. If the long comes first, great, I'm going to take it. If the short comes first, great, I'm going to take it. All right, which one do I prefer? I kind of think the short's gonna do more damage. I think the short is gonna do more damage. Why? Because don't forget, we've just reacted off of that trend line above us, right? That trend line that we can see on the 8 hour. You see this guy? We've just reacted off of this guy. Okay, so we could be getting a nice rotation play. Yes, if you're already in a short, great. Hang on to it, move your stop loss to entry, all of that stuff. But if you're not in a short yet and you're looking to enter a short, that's probably where I'll be looking to enter this short. All right. Okay. So that's trade number one. That's trade number two. So I did say today we're going to be giving way more levels and ideas to watch out for. Trade number three. Now there is a chance that we head towards this high, but we don't quite sweep it, or we get a rotation before we get up there. So perhaps price decides to do something like this. Okay, we don't quite sweep it. We get that rotation here, and then we head down. So in that case, you have to be aware that hey, you are still in premium. Okay, and if you are in premium, you should be looking to short. All right, where could that short come from? Well, why don't you investigate this zone? I'd investigate this zone. I'd also investigate this zone. I'll see, are there any zones in there? Are there any supply zones that could potentially work? Now, I don't have time to do that just yet because I think we have about 5 minutes left of this video. Okay, 5 minutes left. So I'm going to get rid of this red dot because that's not really a tap number three, is it? Oh, look, price seems to be headed up. Price seems to be headed up. Okay. Now you could also say, right, that this within this big range, this is also a range in itself. So if we drop down to say the 5 minute, we can see that more clearly where you've got your, initial low, you've got another tap at that low. Now you've tried to break structure here. You haven't done it decisively, especially not in the 5 minute. Let's take a look at a 10 minute. Let's see if we broke structure decisively here. So on the 10 minute, no, not necessarily. On the 12 minute, not necessarily. See, the higher and higher I go, the less and less this looks like a break-in structure. Now, if this was a break-in structure, okay, so let's say we got a nice little break here. So we had a clear break-in structure here. Let's call that a bull bar. So if we got something like this, a nice break-in structure that came all the way up, that would be nice. I would definitely be looking to enter this long here from down here. But because we didn't get that, I'm just waiting. I'm kind of just waiting to see what to do next. All right. Waiting to see what to do next. Because if we did get that, then this would be a nice potential Trinity model too, wouldn't it? Where you've got, low, high, low, then you get the flipping structure, then you get the retracement, that being your break, that being your retracement, and you look to take that up. Okay, so that's what I would have been looking out for. So what comes to mind next? In terms of our next potential trades, well, let me have a think. In terms of our next trade, now there is a chance that if we're looking at this as, a low, a high, and a low, as we said earlier, that suggests that this is your last lower high that you need to lose. It's also confluent with your range, right? So if price does this, if price comes up, breaks structure, there's no reason why I can't wait for that retracement, perhaps down here, okay, anywhere in this zone really, okay, to look to take that up. But if I did do that, I have to be cautious. Why do I have to be cautious? For those of you listening, have a think. Why do I have to be cautious? Well, the reason I have to be cautious is because, look, we're headed towards this supply range. Remember this zone that we talked about a few days ago? This is a key zone. So we're headed towards a reaction point. So, there is a chance that price could do this and come back up and do this. But then it could just tag this, break structure, retrace, and head down. So you definitely want to see what price is doing up here in the case you enter a trade from down here. All right. So you definitely want to see what that's doing. Now, as far as our shorts go outside of this range, well, cool. If we break up from the range, I'm going to look to enter that retracement long. If we carry on down, all right, that means that if we carry on down, there's a chance that we're obviously going to, lose this 1 hour zone. If we carry on down, we have to look further down for potential plays. Okay, so I'm still going to say, right, this short here is still in play. So this short from this pink box is still in play, but I'm going to refine it up here to this zone, this 4 hour zone. Okay, but anywhere in this pink box is still in play. So if you get a confirmation within that box, I will be taking that. All right, we'll get rid of this because that's basically our range play. What did I get rid of? Yeah, I think this is basically our range play, isn't it? This one. All right, let's zoom out for a second just to see what's going on. So we've got a two plates from here. We've got potential retracement if we come up there. Now, what else is in play? What else is in play? Okay, so what we could do here as well then is we could say, right, let's take a look at the volume profile. All right, so if we look at the volume profile right now, it's coming, it looks to be confluent with this zone we have here. All right, your value area high, this black line, is coming in within this zone we've got here. So what I'm going to do is I'm going to extend this 5 minute zone across, and that's going to be a decisional point for me. I'm just going to look to see what price does as it comes towards that zone. All right, what price could do, what price could do is price could come up here, create something that like this, where we wick that zone. Excuse me, that's the wrong tool. So create something like this where we wick this zone. Oops. I'm going to change this to the appropriate format. So let's call this a bull bar. Okay, we'll call it a bear bar. Yeah. So we could do something like this where we wick that zone. All right. So we come up there. We don't quite close above the range high, but we wick that zone and then we rotate after that wick. Yeah. So something like this. Okay. That would be quite nice. That would be a nice short to enter. All right. So definitely watch out. Watch out for that one. All right. So what else? What else? What else? What else? What else can we see at the moment? Okay. What else can we see at the moment? But bear with me one moment. Okay. So we do have a block here, don't we? We have an 8 hour block here, and it's a 12 hour block actually, but it's a continuation block. This is a continuation block in the sense that it's a continuation block in the sense that we don't have very defined market structure creating that block. I mean, we do have this. We have obviously the high, we have the low, and then we have this high. Okay, so that block is part of this expansion leg on the way up. Hence why it's a continuation block. You know, but that could just be a reason as to why price wants to come a bit lower down. All right, so that complicates things. I'm aware that that does complicate things. Um, but as I say, just watch out for that zone to see if you get your confirmation in that zone. All right, now usually I wouldn't look out for zones like that because they're kind of historic zones in the sense that, we had our original zone, we left that zone, we created another zone, and we left that zone, we created that zone. All right. So now, yes, why would price, retrace all the way back to not only this zone, but retrace back to the second zone just to come up again? Unlikely. But it's still possible. It's still possible. Okay, so I think we're not going to overcomplicate things today. We're not going to do too much. Just have a look at the potential plays from that range. The range will tell you what it wants you to do, anyways. If it breaks out of it, it will give you a retracement. You can enter in that retracement. Okay, and if it doesn't give you a confirmation, then don't enter the trade. Don't force it. Don't risk your hard-earned money, on like a risky play. I wouldn't. Okay, so that's what I would be looking out for there. I'm looking out for a short at the top, a long at the bottom. I'm looking for that continuation down. That would be a nice juicy one. If we get it, we may not get it. And that's it. That's it. So if you found this useful, don't forget to hit the follow button, hit the subscribe, follow me on YouTube. And if you do want one-to-one sessions or you want more one-to-one support, feel free to hit me up on WhatsApp. You can find me on the website tradejournal.co.uk. Otherwise, hope you have a great evening or afternoon wherever you are in the world. And I'll see you next time.